The market drops 400 points. The headlines scream fear, and your stomach drops right along with them, even though the market is sitting near an all-time high. That itch to suddenly do something is the only thing here that can actually cost you money. Here is what that itch actually does. The move that feels safest is to sell and wait for things to settle. But the people who step out to feel safe are almost always the ones still sitting in cash when the market quietly makes it all back. The safest feeling move on the scary day is usually the most expensive one you will ever make. And here is the part the headlines never tell you: the whole reason reacting backfires. If a calm, evidence-backed take on money, the kind that talks you off the ledge instead of hyping you up, is what you're here for, subscribe. If not, no hard feelings. Stay right here, because this next part is the whole point. This is the noise filter, and once you see it, you cannot unsee it. When the market moves and the news screams, there is one question that settles the whole thing, and almost nobody asks it. Did anything about my actual plan for the next 20 years change today? Or did only the price and the mood change? That is the line between noise and signal. Noise is movement without meaning. The price changed, the mood changed, but the value of what you own did not. Signal is rare and structural. Your goals, your timeline, your savings rate, and it almost never shows up as a same-day headline. So the daily move that is rattling you is noise, nearly every single time. And there is one number that explains why the people who just want to be safe end up with about half as much as the ones who did nothing. And it has nothing to do with how smart they are. Hold on to that, because once you see it, you can't unsee it on your own statement. So here is the trick the headlines never tell you. The market's 10 best days and its 10 worst days are next-door neighbors. Most of the biggest up days land within about 2 weeks of the biggest down days. The single greenest day is usually huddled right beside the reddest one. So the red day scaring you right now, and the green day that quietly makes it all back, are almost the same event. Which means every time you react to the noise, sell, go to cash, wait for it to settle, you are not dodging the bad days. You are walking out the door right before the good ones. And missing just the 10 best days over about 20 years can cut what you end up with roughly in half. So the filter has one job. When the headline screams, ask, did my plan change today? Or only the price and the mood? The answer is almost always only the mood. Which means it is noise. Which means you do nothing. You stay in. The wisest investor who ever wrote this down was Benjamin Graham, the man who taught Warren Buffett, and he gave us the perfect picture for the daily headline. Imagine the market as a business partner. Call him Mr. Market. Every single day he knocks on your door and shouts a price at you for your share of the business you both own. Some days he is euphoric, and the price is giddy and high. Some days he is terrified, and the price is grim and low. His mood swings wildly, for no good reason at all. But Mr. Market's mood is not information about the value of what you own. It is just his mood. You are never obligated to trade on it, and most days, ignoring him completely is the entire skill. The scary headline is just, Mr. Market having a bad day. And Graham's deepest warning was this. The investor's chief problem, and even his worst enemy, is likely to be himself. The headline is not the threat. Your reaction to his mood is? Treat the daily quote as weather, not news. So why not just tell the dangerous headlines from the harmless ones, and only react to the real ones? Because on the day itself, you can't. A scary headline that means nothing, and one that actually matters, look completely identical in the moment. You only learn which was which in hindsight, long after it is too late to act on the difference. Since you cannot tell them apart in real time, The only rule that survives is to treat every daily move as noise, and let the plan you set in a calm moment decide what you do, not the headline. And here is what should calm you down. A few 100-point drop, a red week, a frightening headline. These happen constantly. They are not a sign the system is breaking. They are the system working exactly as it always has. It has always rained. The drop is just the weather. So let me give you that number now, the one I asked you to hold. JP Morgan Asset Management runs this analysis every year, and in its 2024 study, the finding was brutal in its simplicity. Over a 20-year stretch, stay fully invested and you earn the full return. But step out and miss just the 10 best days across those 2 decades, and you end up with roughly half as much. And remember the neighbors. Those best days were not scattered politely across calm years. Most landed within about 2 weeks of the worst days, exactly when the nervous investor has already fled to cash. The safe crowd ends up with about half, not because they picked wrong, but because they kept reacting. They were out of the room on the days that counted. And S&P's own scorecard tells the same story. The large majority of professional funds, somewhere around 85 to 90%, over 15 to 20 years, lose to simply owning the index and holding it. Doing more loses to doing nothing. Which is exactly what John Bogle, the man who built index investing for ordinary people, spent his life trying to tell us. Time in the market beats timing the market. Don't just do something. Stand there. And you don't have to look far for proof. In June of 2026, the market fell about 400 points in a single day, and the word everyone reached for was fear. Within days, it was sitting right back near its all-time high. The crisis was, in hindsight, pure noise. The price moved, the mood moved, and the value of what people owned did not. Now here is the trap I need you to sidestep, because it is the same mistake in a clever disguise. The person waiting to buy the dip at the exact bottom, and the person panic selling at the exact bottom, are making the identical mistake. Both are reacting to the noise. Both are trying to outguess Mr. Market's mood. The filter rejects both. The move is never to time it. The move is to stay in. And yes, this is even more true in a real crash. But you don't need a crash to lose to the noise. The everyday headline does the job just fine. So here is the one move. So simple it almost sounds too small to matter. And it has 2 parts. First, reduce the noise you let in. Turn off the price move alerts on your phone, and decide you will look at your portfolio on a schedule. Once a month, or once a quarter. Not every time a feed decides to scare you. Second, when a scary headline does slip through anyway, run the one question. Did my plan for the next 20 years change today? Or did only the price and the mood change? Let the almost always answer, only the mood, make the decision for you. It's noise. You do nothing. You stay invested. Let me make it concrete with one person. Picture someone scrolling at the end of a long day. A red headline stops her cold. The market is down. The words are frightening, and her thumb is already drifting toward the app to do something. Then she stops, and she runs the filter. Did my plan actually change today? No, only the price and the mood. So this is noise. She closes the app. Her contributions keep running on the schedule she already set, in the calm, low-cost plan she built on a quiet day. By morning, the headline is forgotten, and she is still exactly where she wanted to be, in her seat. I am not telling you to buy or sell anything. I am telling you to filter the noise, and stay in the plan you already have. So here is the whole of it. The market's daily moves are noise. The price changed and the mood changed, but the value of what you own, and your plan for the next 20 years, did not. The only person who ever loses to the noise is the one who reacts to it. Because the best days and the worst days are next-door neighbors. And the moment you step out to feel safe is the moment you miss the rebound. So the next time a headline makes your stomach drop, run one question. Did my actual plan change today? Or did only the price and the mood change? Almost every time, the honest answer is only the mood. And that means it is noise. And noise is the one thing you do nothing about. Tonight, do the boring, powerful thing. Turn off the price alerts and decide you will look on a schedule, not on a feed. That single decision is worth more than any market call you will ever hear. Time in the market beats timing the market, and staying calm is the whole edge. If a steady, evidence-backed take on money is what you come here for, subscribe and keep one of these close. Calm investors. Build wealth with patience, not panic.